Hey everyone, appreciate you all being here at USA Crypto Group for this AMA session. We have a project called Liberty Finance with us. Liberty Finance is a compliant DeFi ecosystem, redefining digital lending with inclusive and sustainable solutions. So with that being said, I'd like to welcome the team. If you guys can start out introducing yourself, talking about your team, and give us a bit of insight into your background experience.
Yeah, I think it sounds great. You know what I want to do is I'll go last. I'm probably going to talk the most, so I'll hand over to Ian just to introduce himself and give his background and his role within the team.
Hello all, this is Ian. I've been in the crypto space for the past 7 years, I think, and I've been working in product marketing and operations area for the past 20 years. So we are building Liberty Finance for the past 1.5 years or so. Yeah, happy to be here, and I'll give the word to Patrick.
Yep, this is Patrick. It's good to be back here again. My background is both private equities and accountancy here in the United States, but I also practice internationally. I've been involved in the crypto space since early 2012 when I launched Llama Su, which was one of the first Bitcoin ATM to the market. And I've been involved in various things over the years.
Awesome. Yeah, and I'm Zen. I'm one of the co-founders at LibFi. I've been in crypto also for the past seven or so years. Prior to that, and still currently, I founded one of the largest edtech SaaS businesses in Africa. We have over 2 million users, very focused on agile lean methodology, building efficient teams, efficient products, and making things scale. And currently, leading the team at LibFi to develop our solutions and take them to market.
Awesome. Thanks for the introduction there, guys. Now, Zen, I'm not sure that's your real name, but that's a cool name, man. Zen. That's actually, is that your real name?
Yeah, it is. If I'm in trouble, you can call me Zenathan. That's the full name. So yeah, it's great having a cool name. It was always a challenge at school because, I was a boy and, always got up to no good and mischief. So, I'd always find myself in trouble because everyone remembered that Zen was there, But yeah, it is my name at birth. And yeah.
That's pretty cool. There's actually a product called Zen Protocol, and I actually invest in the project too. I can't think of the founder right on top of my head currently right now, but it is a big project as well. Huge community, but either way, it's a freaking cool name. I love it. But yeah, regarding your team, man, I had a chance to really look at your team, and you guys have put together a very, very good team with extensive background, not just the Web3, but technology and a lot of experience, man. You guys been around space for a very long time. And you guys have done a lot of big things in the space. So yeah, and I always say I always invest in the team, right? Not necessarily the project itself or the concept itself, but I think the team is very important. And so I encourage everyone to check out the website. There is a page about us there, and you can look at their 2 pages as well. But it does give a quick summary of their, the team's background experience. So very extensive, so that's great to have in a project, and yeah, very excited to have you guys here. So starting now, of course, it's called Liberty Finance. I know the last Egos Den that I did, and I guess I was just with Trump launching a project called Liberty Finance as well, and I thought it was a play off the thing, but now that I had a chance to dive deep into the project, I mean, you guys are project, or I mean, nothing related to Trump, and I am very confident that you guys are not writing off the name as well. It's a very serious project, I kind of anticipated that during the Egos Den, but I had a chance to look further into it, and I'm very excited to dive deep into it. So you guys are pretty much trying to, I guess, redefine the lending protocol. I know you have different engines there, and we'll dive deep in detail on every single engine that you have going on. But your core is the LendWide. Is that correct? And if it is correct, if we can start out, I guess first, if we can start out speaking about as I'm looking to this project, I have a sense that it's mainly focused around the Islamic law principle. And if I'm correct on that, if you guys can go ahead and give a quick, I guess, info, why you guys decide to do that, and how does it guide you guys to make directions, and the benefit for the investors through the Islamic principles. So let's start with that.
Yeah, I think it's a great place to start. I think that one of the key sort of focuses that we've had in LibFi is a focus on inclusive finance. We really want to make financial products and services available to everyone, no matter their background, no matter their location, and no matter their belief systems, and no matter their compliance requirements. For us, it's fundamentally important that we can expand it outwards. And this really was a vision that we started with. We formulated our DAO in Wyoming, but we had tech operations in the UAE, and there's quite a large Islamic population in Africa, as well as in Turkey, and a lot of the jurisdictions where the team is all based around the world. And we started to sort of see that there was a potential untapped market, that we could explore. And really, once we went through it, what we found, which is quite fascinating, is the guiding principles of it really speak to sort of three fundamental things. First being services and solutions that are ethical. The second being, services and solutions that are transparent. And the third really being is that, everything that you do in sort of the Islamic finance space is brought to the fore, that we are all aware, and everyone will be aware what every party stands to gain and stands to lose. And I found like some really, really great principles to look at, especially coming off the back of things like FTX, and all the sort of shenanigans that we've seen over the years in the crypto space. And we thought this would be a really sort of interesting point to focus on. But also we saw a potential market. Currently the market cap for the Islamic finance space alone is around $4.5 trillion. And there's been a number of articles recently released. I know Bybit has just launched a whole Islamic finance component to their exchange. But the next sort of big wave of retail liquidity is definitely going to come from the Middle East, Asia, and Africa, in terms of investors coming in wanting compliant, wanting ethical, and transparent sort of solutions that also subscribe to their requirements when it comes to making use of products. So some of the requirements are quite unique. So you can't charge interest, you can't have things that are high risk, you can't speculate. So it really sort of created a number of really cool problems to solve. And we've been really excited about, working through these and solving them as we've been going along. And I think in doing so, we've kind of built this DeFi ecosystem that has sort of four main components. And I know we're going to sort of dive a lot more into them in a bit more deeper sort of review. But maybe at a high level, we've got LendWide, which is a DeFi lending protocol. But I think its big sort of differentiator is it's liquidation proof. And we really are leveraging AI in the design of that protocol. And the reason why we've gone for liquidation proof is, it's to curb the risk component to lending. And I think a lot of people don't quite realize, the risks when it comes to using a protocol, for example, like Aave, especially when there's volatility in the market. I heard you sort of going through some of your portfolio and things that you're interested in and looking in at the start of the call, and you kind of said like, wow, the market is down today. And I think we see this, even though we're on a bullish trajectory, we're going to see these volatile moves, BTC, ETH, these sort of things will go up, 20%, they'll come back down 15%, they'll go up 5%, they'll go up 7%, then back down 20%. And slowly but surely it sort of edges up, in the sort of bullish run. But every time it sort of has those volatile movements, tons of people get liquidated. In fact, I think it was in August, there was a massive amount of liquidations on Aave. And what liquidation really is you stake your ETH into the Aave protocol because you need liquidity. ETH's price drops more than 15%, and you no longer have ETH anymore. It's gone. It's liquidated. And And for a retail investor and someone who's new to the DeFi space, this is quite scary. One, if you see it happen to someone that you know, but two, if it happens to you, your sort of propensity to get back into it again will be limited. And I think if I look at my own experience getting involved in Web3, the initial sort of experiences around, trying to set up a Web3 wallet, I made a lot of mistakes in the early days, sending bad transactions or, staking and things that maybe I shouldn't have or didn't quite understand the sort of fundamentals behind it. And it created a lot of resistance, and it was very hard for me to really overcome those. And I think someone like myself that's always looking to experience bleeding edge technology, it's fine. But a retail investor that's coming in that says, I want to speculate or I want to sort of get involved in this crypto space, and then gets liquidated, it just creates, a lot of negativity around it. So for us, the one sort of core component is the liquidation-proof lending. The next component that we've looked at is our decentralized trading engine. We really wanted to create an inclusive space for everyone to come and trade, to come in and sort of stake into AMM pools to earn, yield on trading activities, but also to facilitate the deployment of our vaults, where we really want to reward our DAO members, with shared revenue. So we're really big on creating real revenue that generates real yield that can be shared with our DAO members if they stake in the vaults. The next sort of component to the ecosystem is the microfunding side. And this was really one of the first opportunities that we sort of dove into, in the sort of compliant way. Currently, it's running on the Hack network. It's live. It's generating real revenue. And it's the first sort of profit share on-chain lending protocol. And there's a number of lending pools on there. It's called Firoza Finance. So it's powered by our protocol. It's powered by our engines. And it's actually facilitating real-world transactions. There are people in Hong Kong, small businesses that need trade receivable financing. This protocol is actually generating financing for them. And the investors are actually then earning the yield from those financing agreements. And there are others that are happening. There's a Canadian car leasing pool where cars are being leased, so it's compliant from an Islamic perspective, but it's actually generating phenomenal APYs, for the investors on those. So we're anticipating Firoza's overall TVL to hit, close to 100 million, during the course of the new year, and then beyond. There's huge opportunity there. And then I think the last sort of component to our ecosystem is our TradFi offering, which is the Islamic financing as a service. And that's really just to go after the 780 billion market that is the Islamic lending market that's currently in the traditional space. It's very inefficient, it's very slow, it's very cumbersome, and it's very restrictive. And if we're seeing the growth of this space that we are seeing, creating an efficient solution for them will just foster more growth. It will drive more things like peer-to-peer lending, more micro lending, and ultimately we can tap into that available market. So that's really all the sort of processes we're looking at, and that's really what LibFi is. It's a fully inclusive DeFi ecosystem, and I think that that's an important point to note. And I think a lot of people would almost appreciate the alignment to the Islamic finance principles in the sense of the focus on trust, fairness, transparency, because it comes under huge scrutiny. So there's a lot of things that have to be done to ensure that it remains compliant in that space. And that has sort of down the line benefits to everybody who uses the protocol. Whether you're a Muslim or not, it actually doesn't matter. You get the benefit of knowing that, projects that are listed on the DEX have been vetted. There are full reports for them in terms of, are they generating a real world product? Are they performing activities in the background that are, honest and good activities, and are their sources of funds real? And are they actually generating value? And that for us is really, really exciting. And then alongside that, being able to access things like liquidation-proof lending, as well as sort of micro lending, opportunities for generating yield, I think is really, really, really cool.
Yeah, thanks for that. The quick, summary on each protocol that you guys have within your ecosystem there. This is actually very interesting. I may not be very in tune as far as the projects that are built around the Islamic principle. But as a crypto trader, as an investor myself, if there is I guess there are principles around the project to ensure that my investment is safer, I'm all for it. Now, with that being said, now is this pretty new, or are you guys pretty much spearheading this I guess Islamic principle or Sharia law projects? Are you guys like one of the very first one, or are there projects out there as well?
So there is the Hack Network. They started Islamic Coin just over a year ago as well. And in fact, we partnered with them. So we work very closely with them. And that's where Firoza Finance has been deployed. It's on their network. And they're definitely spearheading it in the space of ecosystem in terms of full sort of Web3 capability. Really from our side, I think we are definitely first to market with the lending protocol and the way that we're offering lending from a traditional financing space. There have been a number of projects over the last year that's also looking to do something similar, but they're approaching it with a very sort of Web 2 mindset, and they're not looking to leverage the sort of capability of Web 3 when it comes to the way that, when you perform transactions on chain, they're non-fungible. The biggest challenge I think you have with compliance and these sort of things is the trust factor. So, someone can show you an Excel spreadsheet and say, these are all the transactions that were made and there's your proof, but how do you actually know that it's real? How can you trust that? And that's really what centralization is. It's a lot of trust that we put into these sort of central authorities. Whereas when we do it on blockchain, that trust doesn't need to be centralized. It's decentralized. And the moment a transaction is minted on chain, the moment the transaction runs and the block is concluded, it's there for eternity. No one can go back and edit it or change it or add an extra comma or put an extra zero. And I think that for us, is really, really exciting for the space, specifically for the traditional finance side. And I think a lot of these guys are seeing this. And it's why we're starting to see a lot of more, not so much retail, but sort of corporate and institutional adoption of the protocols of the layers. I think National Saudi Bank is launching their own stable coin. We've seen the adoption of BTC in countries as an acceptable currency. So we're seeing a great push forward. And then obviously what we've now seen, with Trump's stance on crypto as a whole, I think that's just going to foster, definitely more development, more growth, and more sort of inflows, into the space. So we just really need to cater for everyone and make sure that we are aligned, for everyone that wants to make use of it.
Very, very fascinating, very interesting. Now, I do assume that now in the West, right? Now, when we talk about that Muslim demographic, it's huge, guys. Now, not necessarily, not too much in the West, but when you're talking about the world in general, it's huge. Actually, probably one of the biggest demographic out there. Now, I assume that as far as financial instrument on the Web 2, right, in the real world, that follows the I guess Islamic principle, they do exist already. So the concept have been proven already, correct? Now you guys are pretty much taking and also innovating into the lending protocol, but you guys just simply just taking the concept of the principle, just applying to the Web3, right? But as far as the real world use cases, the proof of concept with these principles, they do exist in real life with other financial instruments already, correct?
Yeah, 100%. And in fact, that AI Twitter character, I think it's called Truth, I forget the name of it now. Truth Central or Truth. It's an AI Twitter bot that these guys created that just tweets and says a whole bunch of things. It's just completely autonomous. It was actually talking about the Islamic financial institution where it speaks to sort of interest-free sort of financing, which is really one of the key aspects of Islamic finance, and how this can really foster a more stable economy in the future. But yes, it's tried and tested. It's a $4.2 or $4.3 trillion sort of industry at the moment. It's growing at around 13.5% year on year, which really pegs it at 6-7 trillion in the next 4 or 5 years. And we see it probably expanding exponentially from there. And in terms of demographic, 1.2 billion people is the demographic. And yeah, the alignment to the principle is very strong, and it's very important to this demographic. So it's a huge opportunity for them to be able to get into the space, knowing that we've taken their requirements into account, and we're providing a solution for them that makes them feel included. And at the same time, the down the line benefit is we benefit from a lot of these principles, for the overall crypto community. So it's almost like a win-win on multiple angles.
I can definitely see that. Actually, that's actually very interesting to me. This is actually the first time I actually did an MA that's surrounded by or based off the Islamic principle, which I'm not Muslim, but it's actually like I say, I'm an investor for crypto. Anything that to ensure my investment is safer, why not? I'm all for it. Now, the last question I'll have for you before we move on to the detail of each protocol that you have within your ecosystem is. Now, you may not have enough data yet, just because I think crypto is still new, and projects based off this principle may be also new. But have you guys looked into if there's any other financial instruments out there or institutions out there that you guys looked at and did research where you studied the participation ratio? So I guess, like, let's say if there's a project out there that's based off this principle, what is the ratio of non-Muslims participants out there? Have you guys looked into that, or is there enough data to gather that info yet?
I mean, the data is quite sparse. I mean, there's been a number of Islamic-focused sort of projects. We don't necessarily want to term ourselves as 100% Islamic-focused. We are really inclusive. And to be inclusive, we need to take into account the Islamic requirement for everything that we do. So really, we're targeting, across the board. And when we look at things like LendWide, we're looking at Islamic retail investor, Islamic institutional investor. We're looking at crypto investor, crypto retail, and crypto institutional, because a lot of what we've done there, there's huge sort of value in the way that we've positioned it. But if I had to look at someone like the Hark network, I would say it's pretty much like a 3-to-1 at the moment. But they're hyper focused, on the entire sort of Islamic sort of area. And when you then start to sort of branch out and start to look at some of the others, some of them also be more focused. Others are sort of evenly spread, purely because a lot of the offerings that are out there, maybe looking at the traditional space, like the Islamic treasury bonds, the sort of Islamic investment vehicles that do exist, pay really good yields and are very low risk. So it's actually a very attractive space to be putting your money into, some of these products and services and offerings. So even in your own jurisdiction, in your own locality, I would advise you just to go and hit up your local banks, see if they've got an Islamic division, and see what they're offering. And you'll probably find a lot of what they offer in terms of yields and investments and sort of long-term maybe sort of strategies for some of your capital will be a lot better than what the sort of traditional sort of banking offerings are, So definitely I would highly recommend having a look at that. And from what I've seen, it's sometimes 30-40% more than what the traditional sides are offering.
Right. And I definitely see that strategies that you guys approaching there, because you have a huge demographic where they exist, right? They can actually resonate with this concept immediately. But then I think, getting that crossover to the regular demographic, I think as long as the project, I mean, the concept is proven is safer, then I think people will catch on to that regardless whether it's based off Islamic principle or not, right? So I think you're targeting, I think the strategy, I think it's genius, I think. Just because you have a huge demographic of the Muslim demographic already existing, right? And that's just continued to grow into the Web3. So I think that strategy is amazing. All right, sounds good. Let's go to the LendWide. Now, you guys claim to be the first world liquidation-proof DeFi lending protocol. Man, that is liquidation-proof, huh? I mean, that's actually pretty crazy terminology there. Let's deep dive into that. How are you guys doing that, and what differentiates you guys? I guess what are the mechanics in place, and what differentiates you guys, like you said, the Avi or other lending protocol currently right now?
Yeah, sure. So maybe I'll preface it with the way that Aave and other lending protocols currently do it in the DeFi space. So in essence, on Aave, what you do is you have collateral. So you're sitting on some ETH or some BTC, and you would want to access liquidity. And you'd maybe need that liquidity so that you could maybe invest in something else. Maybe you need cash right now. There could be a number of reasons why you would need that liquidity. So on Aave, what you do is you stake your BTC or your ETH or your Link or whatever sort of assets are available to be staked. And they then give you liquidity based off of how much you stake. And it's typically at what they call a loan to value ratio of around 80%, meaning that they will give you 80% of the value of your staked asset as liquidity. And this is great because the selling point for this to people is you still own your BTC, but now you can actually borrow against it. So it's like mortgaging your house is a good example. Now, the challenge comes in is when the market is volatile. So when we see these big swings in the market that we do see, and we will continue to see as BTC climbs to all-time highs, as all the other sort of larger sort of altcoins sort of to climb, we'll see these big volatile swings. I think we've seen over the years, crypto is still heavily affected by news events, heavily affected by political climates, and I suppose much as the overall financial system, but it really is compounded when it comes to crypto. I remember when there was the sort of crash at the start of COVID. We saw this massive drop on the SPX and the sort of other sort of traditional instruments, around 12 to 15%. Crypto almost died, in that drop. And I think that sort of will continue because it is so new and because it is still quite highly speculative for the general population. So we see it sort of swing quite a lot. So what this basically means is you put your collateral into a protocol like Aave, you get liquidity. Cool, you've got liquidity, but you get a 15% swing or volatile sort of movement in your collateral, and then you get liquidated, which basically means what Aave protocol does is they allow liquidators to come in, and those liquidators can then basically buy up your BTC at a discount. And what they buy it for is then basically used to replace the 80% that you borrowed. So if you think about it, you're actually losing quite a bit, on that transaction. And then Aave makes, they charge 5% in fees for the liquidation. So it's actually a really good business model, and I think if you look at what happened around August 5th, August 6th, I think Aave was making over $2 million a day just on fees for liquidations that were happening. So that was just the percentage of fee that they were taking for these liquidations, never mind how much collateral was actually liquidated in that. So where we come in is we looked at this and we said, well, how do we stop this? And what we've done is we've created a really novel feature where you're able to stake your collateral and you're able to then set your risk appetite from zero risk, like I don't want my collateral at risk at all, it mustn't liquidate, to I'm prepared to take a little bit of risk, I'm prepared to take half risk, or I'm prepared to be basically running it the same as Aave is running it. If I'll take the full risk on. And then we've got what we call a hedging mechanism. It is a bit of our secret sauce, so I'm not going to go into too much of exactly how the hedging mechanism works. But in essence, what the hedging mechanism does is when the underlying collateral drops in price, the hedge increases in value. Therefore, it maintains your position. It maintains the stability of your position. But then at the same time, when the underlying collateral increases in value, the hedge then also allows, for your underlying collateral to also accrue value. So you still get the benefit of owning the collateral itself, as well as having access to the liquidity. Now, people probably think, well, why would I need access to liquidity? Why don't I just hold on to Bitcoin or hold on to ETH and, hodl for life, that sort of thing. But there's a lot of benefits to being able to access liquidity off of your staked assets. So if you're looking, for example, at BTC, it's made a bit of a drop. But fundamentals, technicals, we can see maybe another 20%, another 25% increase in its value over the next 6 months. The protocol that LibFi is building would allow you to access that 25% liquidity now. You would be able to buy BTC at the current spot, stake it as collateral, and take out that 25% gain at this specific point in time that you sort of, let's say, estimating it would get to. And now you've got the profits now. And you can then say, well, I've got that. I can now reinvest that into ETH because I'm also confident that ETH's also going to go up, behind Bitcoin. So now you're able to then do that. And you could also then stake ETH and then actually borrow against that and then take that liquidity and then maybe do some other yield activities with it. So it's really going to allow for a lot of really exciting yield farming opportunities. So that's the one side of it. I think the other side of it is, for an institution which wants liquidity from their holdings, kind of like someone who needs to mortgage their assets or their houses, needs the liquidity to do things with. They can stake it up, but they know, just like when you mortgage your house, you're able to mortgage your house because you know that the property value itself is not going to decline in a massive way. It might, in fact, it probably increases in value over time. There's not a risk to it. So it's sort of a safe way to get access to funds is to mortgage your house. But the challenge with, getting access to funds by using BTC is obviously the current liquidation side. So you're able to do that as well. So, I don't know if that explains it, and if that makes sense. But in essence, what we've created is a hedging mechanism. And this mechanism basically protects the collateral, but at the same time, it allows you to sort of access that liquidity up front without that sort of underlying risk of saying, what if there's a swing in the market, and what does that do to my position and to what I hold.
Yeah, no, it does make sense. And it looks like you guys just did do a lot of research into the existing protocol already. So from what I might take on that, it's almost like a dynamic, collateral adjustment in some way to mitigate the risk somehow. It seems like you cannot really disclose a full strategy on there, which I understand. So that's actually really cool, man. That's actually really cool. And I know that within the lending, industry or the protocol sector, there's a big market. Big market. So I can definitely see why you guys are in it. Now, I do know that also one of the protocols you guys also have is actually live right now. It's called Feroza. Am I saying it correctly? And it seems like I read an article on I think CoinDesk on that, just a brief article on there, and you guys are already generating revenue already. Could you speak a little bit on that? And that's also around the Islamic principle as well, correct?
Correct. So I think for us, especially with all our backgrounds on the team, we've all been building real businesses, for the last 2 decades, collectively. So when we approached this project and we really wanted to put this together, the goal has always been that we want to generate something that creates real value. I think that there's a lot of projects in the space which are just built on hype, and we see those projects, crash and burn on a daily basis, especially when there's a bear market. I think most people who were in the last bull cycle, who invested in any old projects or smaller projects that weren't really generating value, that were more highly sort of speculative, would have seen those things or those projects drop 99.9% in value. And the reason for that is because there is no intrinsic value behind them. So for us at LibFi, it's a really important sort of guiding principle that we create something that generates real world value. And at the same time, by doing that, we want to then share that with the community. And that's really where the formation of the DAO came together. So the DAO exists as a way to sort of govern and drive the protocol and drive what we're doing. But at the same time, also it exists to control the vaults, where people that are part of the DAO can actually then use their sort of membership tokens, their LibFi tokens, to stake them into the vaults to then earn a percentage of the revenue that our protocol generates. So one of these is Feroza Finance. So Feroza Finance is the first on-chain Mudaraba, and a Mudaraba is a profit-sharing loan agreement. So the way it works in Islamic finance is the lender and the borrower come together. The borrower says, I've got this business plan or this idea to generate a profit. The lender reviews it and says, okay, I like your idea. I will borrow you the money, but then we share in the profits. And it becomes an agreement between the two parties. It's called a profit-sharing agreement. What we've done is we've now built this on-chain under Feroza using our protocol. And what we've enabled now is the ability for multiple people to invest or contribute to these Feroza pools. And then each of these pools are creating these profit-sharing agreements with loan originators in Canada, in Hong Kong, in Brazil, in Africa. And these are all generating some really, really exciting yields. Some of the profit share arrangements are generating 25 to 30% yield every 60 days. It's phenomenal, because what we're getting into a space is that, there are real opportunities that exist in the world that require financing specifically in the Islamic space, that cannot be interest-based, but they need funding. And this is really where Firoza starts to shine. So there's a massive demographic that's going to be making use of it. And because it's live and it's generating revenue, it really means that even prior to launching everything for LibFi, so prior to our TGE, prior to our actual launch, we've already started to prove our case in point that we want to create something that generates revenue, that generates value. And all the revenue that we generate from things like Firoza and everything else that we're going to be doing, we're going to push that back to the DAO via the vaults. So we're quite excited about that. And then that just really incentivizes us as a team to hold on to our tokens, right? I think a lot of projects also suffer from, teams, dumping on their communities. Our incentive is more to hold and to stake because we can then earn a piece of the revenue that the DAO is creating. And I think that's really going to be the incentive for everyone who gets involved in the project, is like having that ability to, yes, have the underlying value accrue and increase, but it's going to become more and more value as people start to see, wow, I can hold LibFi, but actually get paid in USDC or USDT for all these cool things that are happening around the ecosystem and be a part of it.
Yeah, that's actually very interesting. How long ago did you guys launch that the protocol?
So we launched a closed POC in August. So we set up a number of pools. So a lot of it, because everything's on chain, we had to go through extensive auditing to ensure that there's no exploitable issues, issues with contracts, those sort of things. There was a big focus on PCI compliance and aligning sort of the way that the infrastructure was put together to ISO 27001, which is an international compliance standard for security and information management. So we had to sort of cross a lot of those hoops. So we launched the private sort of pools around August, I would say August, September, and proved the case. We're able to show that on-chain it works, transaction works, funds were flowing, yield was being generated. And then around the beginning of November, we then launched the public beta, which is currently running at the moment. And we've seen a massive uptick in that. I think we've doubled the TVL of the hack network just with Firoza Finance Protocol alone. And I think it's definitely going to sort of increase. We've got a ton of more potential pools kicking off. There's a lot of excitement in the Islamic space, in the Islamic finance space for Firoza. There's massive opportunities for people needing funding. And really what that means is investors like yourselves and myself, we can actually then go and participate in that and actually earn some really, really good generative yield from the Firoza protocol. But also what it means is that LibFi now starts to earn more revenue from that. And all that revenue can kind of get pushed back to the DAO. So that then just creates down the line value directly to the LibFi community and project too.
Yeah, so part of the fees, it does get kicked back to the DAO ultimately as well. And on top of that, the protocol shares profit with the I guess the people involved, the investors, and I guess the project itself. Now that's kind of different, correct? So one of the Islamic principles is that investor cannot earn interest, correct? So you have to share I guess the profit, and you have to, I guess, share the loss as well, correct? Am I okay? So it's actually, because it's kind of like, I guess it encourages everyone to work together in a sense, where like equal, you're at the table equally, right?
Exactly. So one of the really cool partnerships that we'll be announcing soon is with a protocol called TakaDAO. They've launched the first decentralized life insurance product. Super exciting, and through them we are working to formulate and create an insurance product that sits alongside the Firoza pools. So to really then protect those investments even more. But at the same time, ultimately, if there's more losses than profits, in anything that you do, it won't be successful. So there's a lot of effort, time, and energy being spent on forming these pools, on identifying the origination processes, the different funding opportunities that exist around the world, and making sure that we can, you can never guarantee anything, when it comes to financial products and services, but we want to make sure that we can put back decent yield onto the Feroza pools. And a lot of that work's been done by the Hack Network. So they're really focusing on that. They're throwing a lot of energy and effort and stuff behind that. And from our side, we're really focusing on that protocol, being solid and sustainable. And then, yes, exactly that. We basically got 100% of net profit going back to the DAO. So basically every bit of profit that it makes goes back to the DAO to be distributed to DAO members.
So I assume that the DAO is based on how much tokens you hold, and the yield that you get is, I guess, distributed proportionally to your holding, correct?
Yeah. So what we've done is we want people to participate. So we definitely want people to participate in governance. We feel it's important. If you invest in a project, if you get involved in a project or join a project's community, it's better to not lurk, like get involved, get involved with both the community side, but also in the project itself. So owning LibFi tokens will give you the ability to decide the future of the protocol, the rules of engagement, the things that it does. And then what we're setting up within LibFi is something called the Amana Vault. And the vaults themselves, if you then take your tokens and stake them into the vaults, that's when you're actually eligible for yield distribution. So there would be sort of two steps to it. You would need to acquire the LibFi token and then stake it into the vaults themselves. And that kind of commits and it kind of secures us. It allows us to then facilitate a lot of the things that we need to do. And then in return, yield is then shared. When we TGE in Jan next year, the first vault goes live. What we've decided with the first Amana Vault is we want to allow early adopters of LibFi to accumulate more LibFi, because the bigger your LibFi holding in position, the more sway and control you're going to have over governance, as well as the more opportunity you're going to have to earn yield. So Amana Vault V1 will allow you to stake LibFi and you will earn more LibFi. So it will compound the LibFi that you stake. And then V2, once that's launched, then you will no longer earn more LibFi, but you'll actually then start to earn USD or USDC based on your share percentage in that vault, and actually the revenue that gets passed across to it.
Okay, so that's a huge incentive right out the gate. I do have two more questions on that. What is the current TVL right now on your Feroza Finance protocol right now? And also the second question I have is obviously you guys are building all this protocol based off the Islamic principle. Now, do you who governs this principle? Because I can not only imagine people just started building, claiming that this is based off Islamic principle. Who's the body governance of okay, this is like does that make sense? Like who is approving all these projects? Yes. I guess in order for you to say, hey, this is based off the Sharia law or the Islamic principle.
Sure. So I think the way that it works is that there's a number of requirements. So one, you need to have a Sharia board of scholars who understand the principles and the law to the T. They then govern your process. So they would review and guide and drive the processes that you set up. They will report on the way that these processes run, the way revenue is generated, the different services that you offer. Once that's in place, your board then submits an overall report to a governing body. So there's a governing body like IOFI. IOFI would then accredit you, and you would then receive what they term a fatwa. With Feroza Finance, the fatwa and the board all sits under the Hack Network. So they've analyzed it, assessed it, and they've issued the fatwa for that in terms of its compliance. And each pool then is also then reviewed and issued its compliance certificate. From a LibFi side, the formation of the Sharia board is in our roadmap purely because it is an expense that will take away, like it wouldn't make sense for us to do that pre-launch. But post-launch, once we start to deploy some of our retail financial services and products like LendWide and some of the DeFi sort of trading things that we want to sort of do in a compliant way, at that point, the board will come into full formation. And the way the board would work in conjunction with the DAO is that the board would oversee proposals. So they wouldn't have any capability on the vote, but they would be able to approve or reject proposals. So if someone comes in and says, we want LibFi to build a gambling engine, the board would say that proposal is not acceptable under the requirements of being compliant, and then that proposal wouldn't be passed for voting. So that would kind of be the way that it's formulated. So it really would only be if a proposal goes against the principles of Islamic finance. So that means it speaks to things like riba or interest, or sort of non-compliant activities like gambling and sex and alcohol and those sort of things, which are not permissible. But outside of that, the direction that we take, the services that we offer, we'll be putting forward proposals around, which features to add to the DEX next, or, which assets to support on the LendWide next, and those sort of things. And that's really where governance is going to make a lot of sense.
Okay, so there are tight measures in place that you have to go through. And now have you guys started your board already, or is that something that's ongoing as well?
So we've got our Sharia advisory team, very experienced guys from the traditional Islamic finance space. So they've already been advising a lot around what we do, what we set up, a lot of the way we've created the protocols to ensure they are aligned and compliant. We've identified, the potential sort of board seating arrangements that we need. And really, these are one of the sort of goal metrics that we'll have once we launch products that require, these sort of compliance bodies in place. But for things like the Amana Vault and for the structure of the revenue that gets distributed from Firoza, those patterns will be issued, by a pre-existing board, not necessarily tied to LibFi, but an existing body. So that compliance component of it is very key for us. It's also sort of one of the things that we're doing when it comes to creating an on-ramp, off-ramp into our environment. We want to make it as easy as possible for retail to get into the space. So we're focusing quite heavily on embedded wallets, being able to sort of onboard with an email or a cell phone number. And then once you get experienced and you've sort of maybe experienced some of the courses and stuff we would launch on the academy, you would see, okay, I can now access my private keys. This is how I do it. This is how I secure my wallet. This is how I can actually manage my own wallet. I don't need to use the embedded wallet. But we can kind of drip feed that process and that approach to new users, to retail. But we will allow retail to come in quite easily. And then the on-ramping and off-ramping is also vitally key. And there are a number of on-ramp, off-ramp providers. So that's where you're able to move from fiat to crypto in a DeFi space and then back to fiat quite easily. But a lot of these protocols or these platforms charge exorbitant fees, So, if you've got $100 in your bank account and you want to get into DeFi and you use someone like Transact or MoonPay, you end up with like $30 or $40 on ETH, which is crazy. You're already down 60% even before you started. So on-ramp, off-ramp, it's 1% transaction charge. It's primarily to the vendor that's doing that, which is Ivory Pay, that we've got a partnership with. But really it is around, like, we don't want to hurt anyone that uses the protocol for the sake of just generating fees. We would rather have lower fee points and have scale and more adoption, rather than kind of taking a lot from a few, if that makes any sense.
It does. It does. I love the in-depth answers that you've been given so far there, Zen. I mean, it shows me that you guys have done your research in depth. So that's awesome to know and to hear. Yeah, I mean, I think what's left we have not covered is the the Islamic financing service and also the trading DEX. If you can go ahead and run through that really quick. Now, what really stands out? Let's do the trading engine, the trading engine, the DEX or decentralized DEX exchange. I did see somewhere that I think when I was reading through your white paper or your one pager, and it says that there's going to be vetted investment options. What does that entail by vetted? How can you guys vet? Are you guys vetting projects that goes into your DEX ultimately? Is that how it works?
Yeah, so we basically want to give people the opportunity of choice, right? So you should still have the choice to decide what you get involved in, what you invest in, what you trade. But we want to also then make sure that we vet a lot of the projects that come onto the DEX. Because it is a DEX, in essence, anyone can create an LP. That is sort of the methodology of the DeFi sort of AMM approach. But we really want to then have vetted pairs that we've done the due diligence on. So we will tell you, one from a Islamic finance perspective, is this asset compliant? And what does that mean? It means that it's generating real world value. It's not generating any revenue from speculative sort of activities or interest-bearing activities. And it's actually not doing anything that's not for the greater good of society, I think as much as there are certain aspects of Islamic law that people don't necessarily subscribe to in terms of like their belief on alcohol and those sort of things, I think fundamentally, if you think of the broader population of the world, and especially in the poorest of poor communities, things like alcohol really affect those communities badly, and even if you look at the massive drug problems we're seeing around the world, places, especially in the States, we're really on board and keen to be able to showcase that, hey, this project is an ethical project. It's doing things for the good of the world. It's not sort of promoting anything that's detrimental to people. So a lot of that is really what we go to from a vetting perspective. It also has to be a project that's backed by a real team. It has to be a project that, we can comfortably say, and the Sharia team that analyzes it can comfortably say that, yes, these guys are legitimate. And I think what that means for everybody coming onto the LibFi DEX is that you would really be able to see, this looks like a good project. You like the narrative, you like what they're saying, but now you also know that it's now been extensively vetted, so that we've actually taken the time and the effort to go through it. What also this opens up is down the line revenue opportunity for the protocol, where a potential project can say, well, we want to expose our project to your market and to your investor base. And we could potentially then generate revenue from going through the vetting process with them. Which once again would just be more revenue that gets created for the DAO. So there's a lot of opportunities to that, but I think there's a lot of value add that we're going to have, with regards to those vetting pieces.
Yeah, it's actually very interesting there. It's almost like a pre-screen in sort of I guess, to a certain level, right? Then I guess you let the community do the rest, right? But yeah, I think that's based off the Islamic principle. You guys can, so as an investor, you can go in, bam, 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 right? You can dissect the project, assess the project very quickly. But I do like the fact that you have options there, right? Because like you said, the fundamental as the DEX is decentralization, right? So anybody can do that. So okay, that's actually very interesting, very unique there in the sense as well. Yeah, I mean, sounds good. So what we have left is that commodity in the academic there that you guys are building. Let's talk about the B2B commodity lending. What is that about?
Yeah, so currently in the Islamic finance space specifically, it's a $780 billion market annually. And in essence, what it is it's a financial instrument that gets used a lot to facilitate financing or lending. And it involves the buying and selling of a commodity to sort of facilitate the transaction. So at a high level, if you go to an Islamic bank and you want to take out a loan, what the bank would do is they would say you wanted a loan for $100,000. The bank would then go and buy, say, $100,000 worth of platinum or chrome. They would then sell that to you for $110,000. But you don't necessarily need the platinum or chrome, so you immediately sell it on the open market for $100,000 because that's what it's worth. You basically receive the financing that you're looking for. You get the $100,000 that you wanted, but you actually now owe the bank the $110,000. And that's what they call a commodity murabaha or tawarruk structure. The biggest challenge with that, though, is it's a very, very inefficient system currently run in traditional Islamic finance. When I say inefficient, I mean that these transactions can take anywhere from 24 to 72 hours to conclude because it requires very manual engagement and interaction between the bank, the commodity exchange, a hedge provider. It requires volume. So a lot of the times the commodity exchanges will say to the bank, well, we need at a minimum 100 million or 500 million in order volume to perform the transaction for you. So there's that limitation. So banks almost have to wait and pull up all the requirements together and then kind of do single transactions to achieve it. And it's very long because it requires, so many moving parts, and a lot of it's done over email and telephone. I mean, it's crazy to think, but this is how it's operating. What we've done is we've taken that whole process end to end, and we've built a protocol for it to live on chain. What it means is that we can do exactly the same transaction that these banks are doing that's taking them days. We can do it in 12 seconds. What it also means is that we're able to do it for low volume amounts, meaning that we now are able to open up opportunities for peer-to-peer lenders, smaller Islamic financial institutions that don't have maybe the volumes that are required to offer these type of lending instruments. They can come straight to us. We can offer it to them through our protocol. It performs exactly the same transaction that will be done traditionally, but it's done super quick. It's done all online. It's done on chain. And I believe that we're going to see a massive sort of growth potential in that. So we've already got a POC lined up with the fourth largest bank in Africa, starting early next year to actually POC the protocol. And we're just formulating another agreement now, which is probably going to do it in the region, if it gets to where it needs to get to, around $500 million in volume a day. And really what the benefit for LibFi is that all of those transactions that run through this commodity protocol, we take a very, very small basis point fee on that volume. And once again, those fees then get distributed back to the DAO. So we're kind of making use of the technology that the DAO has built. We're making use of what the DAO is creating and driving, and we're basically taking that and we're generating real world revenue. And what's really exciting about the team is we are all highly experienced in B2B relationships. The business Synergize Learn that I created, it's got 2 million users on it, all B2B customers, so it's all the employees at all these big B2Bs like McDonald's, like Toyota, these sort of guys. So we've got a really strong skill set around building these sort of B2B relationships. So we're really excited about that. And the potential revenues from that are huge. I think I might have mentioned earlier, it's a $780 billion volume or market annually. And really, we need a small fraction of that to generate some serious revenue for our DAO. So it's really exciting. And that's really what the commodity engine is all about.
I mean, just to highlight one thing here, maybe, to emphasize the size of this or volume of this business, like if we consider a single bank in a week doing around 2 to 4 billion in lending. Basically, this is like one bank that we know of in Africa. So the volume is actually massive. Yeah.
Wow. Yeah. And the proof of concept, how much did you guys secure already? Already, you said? For the liquidity.
The 2 projects are ones with the bank. That one, they want to do a POC for a smaller amount. It will probably be a couple million that they'll want to sort of run through a transaction, show that it works. And then that will then increase. And the other one that we're setting up now, that's going to be around $500 million a day in volume when it sort of ramps up to its full capability. So those are the POCs that we're doing at the moment. What we're really excited about is, once we get these POCs vetted and gone through, it then basically opens the door to say, give us more volume, cool. But then it's, one of the age-old sort of secrets of good B2B marketing, right, is that you now have these case studies that you can then go to other banks and say, look, this bank's doing it. This is how well it's working for them. This is how well we can do it for you. And then it's just sort of driving that cycle and taking over the market, as much as we can.
Wow. Okay. That's incredible. Yeah, I mean, that's incredible that, yeah, I mean, I'm not sure what else to say. This is actually crazy. All right. The next thing that we have left is the academy. Let's talk about that there, and how does that how are you guys going to plan to? How is that going to? I guess for the greater goods of the investors, I guess the people in general. But I think as the space evolve, I think education is so important, right? Especially lately, we've seen BTC hitting 100K. I feel like this is literally just the beginning for us, if you ask me, right? With what US is doing over here, where we want to make this a capital of US, and as we know, if US does something, a lot of other parts of the country follows. I've been in the space for a very long time, and I'm actually, for the first time, I'm actually very, very excited about the space and the directions we're heading. But that also comes with a lot of education I feel that's needed in the space, because it's a no-sum game, right? So if I win, you have to lose, right? And a lot of people, you hear a lot of people win every single day, 100x's, but and the contrary to that, people also lose. So what is the academy about here, Zen?
Yeah, so I think for us, education and learning is something we all, as a team, very passionate about. Our CTO Chris was in the education space for many years, and then went into tech in a big way. My SaaS business that I started in Africa is an ed tech company. It delivers online learning and training. So very passionate about learning, and the academy really came about is the way I sort of got into crypto. I got into crypto maybe like most people by accident, sort of stumbled into it. And once I'd gotten into it, it was right time, right place, and made a lot of gains very quickly, and kind of thought I was an absolute genius. Everything I bought just went up, and this was back in 2017. And then suddenly everything I bought just went down. And I was very frustrated, so I spent the better part of 3 years from 2017, or from the beginning of 2018, when everything started to cycle down, all the way through to the next sort of cycle, learning about the asset classes, learning about trading, learning about risk management, position sizing, fundamentals, technicals. I spent time with a prop shop in Puerto Rico, went to understand how to trade options, how they trade futures, how that whole landscape works. And really educated myself so that I could make informed decisions when it came to trading, and during the pandemic and the lockdown, it paid its dividends, all that hard work, putting in that time. And what I learned from that is, in learning itself, I sort of guaranteed a lot of success and prevented a lot of failures that could have potentially happened. So for us, the academy is really important because it's going to teach people about the fundamentals of what it is that we actually do and what it is that's actually happening with their investment, with their capital, with their tokens, with their assets. It's a big piece on understanding risk management. I think a lot of people don't understand risk management. They don't understand that if you take a very risky sort of investment, that the bigger your position size in comparison to your overall portfolio that you take into that, if you lose that, the harder it is to recover, and I think these are things that people don't quite understand. So we have a big focus on risk management. We have a big focus on understanding Web3 technology, understanding browser wallets, private keys, and then all the security around that, preventing people from getting scammed, preventing people from getting hacked, from getting exploited, which we always seem to see, there's all these sort of things that carry on. And that's also a big part for us, is to focus on that. And then really what we want to then do is we want to bring the academy into the DEX and, in essence, unlock features based on what you've learned. So if you understand risk management, if there's the ability to take a bit of a margin trade, you can only do that once you've gone through the academy, once you understand the risks associated with that, or being able to invest in certain vault protocols, or be able to sort of participate in an AMM pool. We want you to understand what impermanent loss is. We want you to understand, what the risks associated with that is, so that you are well educated and well informed. And we believe that by doing that, you have a community and a user base that really knows how to use the technology, and them using that technology will generate more revenue for the DAO. So it's about having an educated user base, as opposed to just saying, okay, well, we'll just take advantage of the user base, and when they all lose, then, oh yeah, we're in a bear cycle now, so we'll just have to wait for the next bull cycle to take advantage again. We want to make sure that, we have staying power, that people continue to sort of benefit, throughout all the cycles that are definitely to come in the coming years. And I think Mark Twain says it the best, history doesn't necessarily repeat itself, but it often rhymes. So if you've been in the space really long, you will know how these things play out, and more than likely they will continue to play out the same. I mean, it's the way that these financial markets work. So that's really what the Academy is. It's a way to sort of educate our user base to give us staying power and customer retention.
I love it, man. I love the concept. I wish actually there's a way for the newbies to come in and kind of like what you described there. Based on your knowledge, you open a door based off your knowledge, right? I think if everybody go through, if there's actually a system in place right now, even me, I've been in the space for a long time, but you only know what you know, right? And I think knowledge in the space is so crucial. And I would definitely go through the whole process just so that way I can test my knowledge, uh, to make sure that I'm safe in the space. So I think the idea there, right? Open the door based off your knowledge, or open up the next step based on your knowledge. I think that's actually really, really awesome idea. Yeah, I think that's incredible. Hey Zen, you are a genius. I gotta say, and I think you have done a heck of a job. Your analytical skills, you guys did a lot of research. I can tell by speaking to you. Every answer is in depth. Uh, I like it, man. I like it. I first time when I heard about the project, as far as the Islamic based off of Islamic principle, I didn't know what to think. But as I dive deeper into it, it does make sense. It does make a lot of sense. And I think the carryover, the crossover to the general demographic, I think, just like anything else, we're all here to ensure that our investment is safe and to make money. So if that's proven, it doesn't matter, right? It doesn't matter whatever you want to call it. If it's good investment, I think people are all for it. And I can definitely see the strategies that you guys are approaching. Now let's talk about where we at, Zen. As far as raising money, how much have you guys raised so far? How can the listener right now participate?
Yeah, so we've closed our pre-seed and seed rounds. We raised roughly $400,000. That was, predominantly, I think, the initiation of the project. We really leveraged a very private, small community and a close-knit network. I think collectively as a team, we've further sort of invested, roughly close to another $300,000 of our own capital into the project, to sort of add the sort of value development costs, infra costs, those sort of things to sort of build it up. And really, at this point, we're gearing up now for TGE. So we've launched one or two sort of private sales already with our partnership with the Hack guys. And we've got a pre-sale now on GemPad that's launching on the 22nd. So if anyone really wants to get in at a sort of private sale rate or pre-sale rate before the public sale, now's the time to do it. It is hard capped. So it would really be advisable to get onto GemPad, set your notifications so that on the 22nd when it opens up, you can get involved at that specific point. And then, I think next step would be public sale, and then TGE. And then really it's just fast forward, hard focus on, deploying a lot of what we've created on testnet and a lot of these protocols that we're creating onto mainnet. Something really exciting, which actually happened just before this AMA. We've just been awarded a phenomenal grant by Alchemy and Arbitrum. So that's really going to allow us to develop at a lot more speed, have a lot more infrastructure at our fingertips, which is also really, really exciting. So those that's definitely going to be announced in the coming days. There's a lot of great things happening. But I think at this specific point, if you want to get involved, if you like what we're doing, and you want to be part of this sort of community and this sort of revolution that we're creating, get involved on the pre-sale on GemPad. Hit us up on our socials, on Telegram and on Discord. We always keen to have active discussions with our community, and answer any questions that people might have.
Okay, so the 22nd on GemPad, and you mentioned there's a hard cap over there as well. Now, from this point on to when you guys launch, what are you guys? Is there a hard cap that you guys trying to raise? And if there is a hard cap, how much money do you foresee that you guys trying to raise?
Yeah, so I mean it's pretty straightforward. We're looking at 500K on the private sale. To kind of pull that together. Public sale would be close to $1 million. that we would look to raise. So in total, we want our goal overall, including pre-seed and seed, is 2 million. But I think we've already achieved exponentially more in terms of value for what we've raised so far, which we're really excited about. So it's really where it's at. I think that we are public selling at around 2.7 cents. So I know the pre-sale is definitely a lot less than that. So there'll also be that sort of initial value prop that will come with that. But we definitely anticipate that, once people start to realize that the potential of the yield that's going to be coming to LibFi token holders, and that having this token really just makes sense, that value prop will definitely drive, more adoption and more community growth and more people getting involved in the project, because it is something that is real. And that's not necessarily just speculative or a meme token or something like that. It's a project that's run with a sort of value-minded centric sort of approach.
Yeah, sounds good. Now, what is the rough, like an estimated market cap, a good thing that you guys going to be launching? I know that you cannot really pinpoint down to the exact, but you guys have a rough number on that?
It's less than 1 million.
Right, very nice. Less than 1 million. Okay. All right, sounds good. Now with the gem pad, I guess we will see all the detail later, but on the gem pad sales, all the tokens are going to be locked up over there as well for the gem pad sales. I guess, is there any vesting for the tokens that would be on launch on gem pad?
Yeah, I think I know that you're working close with the gem pad team.
Yeah, we will be providing a manual way. I mean, we will basically make a claim mechanism for all the participants.
Yeah, I look forward to see the detail on that. GemPad is actually our partner as well. We are the SDAO partner for GemPad, so very happy that you guys are doing your silver and GemPad as well. Man, Zen, you did a heck of a job, man. I love what I hear. This is the project I'm actually going to be paying very close attention to. Yeah, I like what I hear. And I love the fact that you guys actually have a product that is actually generating revenue already. But I think it doesn't take much that, you guys are actually, as far as the development go, with the launching market cap around 1 million, I think you guys a little ahead of most of the projects there, right, as far as development go. So that's my assessment on it, guys, but it's not financial advice, okay? Make sure you guys do your research accordingly. Anything else that we missed, Zen?
Yeah, I think we've covered it all. I think, I think the most important thing is just to get involved in our community. Like, that's where a lot of the information is disseminated from in terms of what we're doing, or follow us on socials. That's where we share quite a bit. But we really are a workhorse team. We really focused on building and creating this value. So, yeah, if anyone just wants to know more, always keen to discuss it, always keen to give more insights. And I do know that for the guys that do participate in GemPad, there is a private group that's been set up on Discord where a lot more deeper insights will be shared. So a lot of alpha around what we're doing that won't necessarily be made public immediately, but really we'll be sharing with people that contribute early and that really want to support and back the project. So yeah.
Awesome, guys. And after this, we will post we will pin a post, right? And on it, there will be the TG website. Make sure you join the TG. If you go over there, just a feedback on the AMA. Okay, do not spam anything like that with a bunch of stickers. Just a feedback. And I know that we have a bunch of questions in the room. We're not gonna go and do questions today. A lot of the questions that you guys posted on the banner there usually get answered anyway. But if you guys go there and just ask questions over there, and we will pick a winner as well, just $10 for fun. Okay, do not spam their room. Yeah, make sure you guys do your research accordingly. My assessment on this is that I do like the project a lot, and I do see myself investing in the project as well. But yeah, this is not financial advice though. Okay, make sure you guys do your research. I have made bad decisions before, so and I thought we all have, right? We all have. So yeah, thank you so much, Zen. Thank you so much, X Squad, and also Patrick as well. I know we chat last time there. Very detailed, great presentation of the project, very detailed, and I like it a lot. So Zen, if you guys don't have anything to say, we're gonna go ahead and wrap this up.
No, I'm brilliant, and thanks so much for hosting us, man. I think this was a very nice conversation. You know, it really was. It was great chatting to you. I love your insights, and I really appreciate the time you've taken to understand what we do. And yeah, look forward to sharing more stuff with you guys, and definitely having further conversations in the future.
Yeah, for
Thank
sure.
you for having us.
Yeah, X Squad, Patrick, Zen. I love to bring you guys back up, man, because I definitely see where this can head, especially with the principle that you guys building the project around, and just knowing the demographic, right? And when I think about the project, it's almost like a targeted demographic, right? One, it's not a small demographic, it's big, but also there's definitely a crossover when it comes to Web3, as long as the protocol works and it works, right? So I think you can penetrate the existing demographic immediately, but also you can open up to the existing other, general demographic as well. So I think the strategy, is actually ingenious in that aspect. And I look forward to see how it will play out. Yeah, great job, guys. Great job with the strategies, and just you've done your research, everything. Zen, man. It seems like you don't sleep, man. You you guys have put in a lot of work at this project, I can see.
No, I appreciate the feedback and the validation. And yeah, I think that still lots more to do. So we're going to get back into it. And yeah, very, 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 very excited about the future of the space and the future of LibFi. I think it's going to be a phenomenal journey for all of us.
Sounds good. And we'll keep in touch. I'm not sure if I'm in a group with you guys. I know my team usually the one that reach out, vice versa. But I'm not sure we have a group already, but let's keep in touch.
Agreed. Thanks, man.
Thank you so much, guys. We're gonna go ahead and wrap it up. And just for fun, guys, we're gonna post the information. Okay, join the TG, check out the website, do further research. Okay, they do have 2 pages. It's actually very well put together. I went through it. It didn't take long at all. Make sure you guys follow up and do your research. As far as the listener go. Oh, hey, Zen, we'd like to award one winner, just a listener. If you can go ahead and just randomly pick one winner here, that'd be great. And
right.
DM me.
I'm going to do it. My first check is to see if anyone has their name starting with the letter X.
I love X.
We're going to quickly see if someone changes their name. Let's have a quick see.
Yeah. I don't think I see any X on here.
Yeah, I don't as well. But I'm keen to let's do Impala 567.
Impala 567. Congrats, Impala, and we'll go ahead and I'll go ahead and grab the username, and we again, guys, go over there, ask questions. I know there's a lot of questions in the comment section. Ask questions, do not spam, okay? And we'll pick a winner just for fun as well. My team will go over there and pick a winner. Ask some intelligent questions, okay? To be honest with you, I don't even know how you guys generate all these questions. There's like hundreds of questions. But yeah, go over there, ask a question, okay?
Chat GPT, man.
Is that what it is? I still don't know how. Like, there's like hundreds of questions. Yeah. But anyway, most of the because usually AMA we go pretty we dive deep into the AMA. So I would say 99% of the questions do get answered. So I don't want to waste the team's time and repeat the same thing over again. But if we missed your question, go ahead and ask again. So yeah, thank you so much, guys, for being here at USA Crypto Group. And Zen, Patrick, X Squad, thank you so much. And I would definitely follow your journey.
Awesome. Have a good evening.
Thank you so much. Bye-bye.
Bye.